Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
All right.
Marco, how are you, man?
Good. How are you?
Good. This market is kind of trying to taking everything down pretty big, quick.
Yeah.
You know, it feels a lot worse than it actually is. The market's down 80 bips, and stocks. There's like the stocks that have been the focus are really getting hit pretty hard. So I mean, I'm looking at it. It's a little. I think for the day we might see. We might have taken the brunt of it, but nonetheless, you're seeing stocks down pretty significantly in names that are it's almost unfamiliar to us, right? To see some of these names down as much as they are over the last couple of days.
Right.
But look, let's jump in it in a day like today. I think what we're seeing, what I've noticed, is a lot of risk reward adjustment. We'll see that across a number of industries, a number of sectors. I'll point out a couple of things that we've seen in the past, and now we've learned and we've seen it on the show what people are doing. We've talked about it, and now we'll see how they are. The big guys are flipping a little bit. They're turning it the other way, and I think it's going to be clear when we show it to you. That's probably the highlight of today, because it's very clear in certain industries that we've seen in gaming. We've seen in the reopening trades. It's just very clear. So we're going to see what they're doing and what they're doing right now. It's what they did there, what they're doing now, and we're talking about a period of 2 weeks. Things have turned around pretty quickly. So let's just jump into it, because there's a bunch of names that we can actually look at. Before doing that, we'll just talk about some of the bigger downgrades, upgrades that I saw today. The Nike downgrade. Okay, there was a Nike downgrade that I think is important to look at. We could take a look at that if we have time. They basically, the downgrade was based on China and sort of the how China and the U.S. are maybe battling each other out, and Nike might be right at the center of that. Apple had a buy rating today, but we talked about hedging yesterday in front of this meeting that they're having, this product event. During the product events, there's usually a run up, and afterwards, as long as they don't announce a brand new car, the stocks usually it comes off a little bit. Now, Apple's up a tremendous amount, so down 1-2% is not a big deal. Probably after this, if they don't say anything, you could see it, 2%, drop for the day, or maybe more, but that's usually what it is. And then there's a Tesla upgrade by Mizuho, looking like it was an upgrade, it was just raising a target price from 775 up to 820. But you got earnings coming up in a couple of weeks. If we have time, we'll take a look at maybe some trades, bullish and bearish on Tesla, and how you think about it. I have one trade in mind that I think sets up pretty well. You have to have a certain thought process on the trade. You have to be thinking about Tesla in a certain way, but we'll walk through that. So why don't we talk about the other upgrade that we saw that I think is a name we mentioned, I think it was just last week or maybe 2 weeks ago, which was Fisker.
Yes.
Fisker, FSR. So they had a initial buy from Bank of America today. If you look at the stock here, let's just pull up the stock. FSR. All right, so we know the story here. The stock's been getting drilled. I'm going to lower this time frame down to about 6 months. Stock's been getting drilled here, almost straight down from 32. Had this bounce straight down here. The problem. So here's something that I want to do here. We started talking about Fisker, I believe, somewhere around here. I believe it was somewhere around here. It's kind of my memory. Do you maybe you should look up in the YouTube. We talked about Fisker a couple of times, and you probably can see it better than I can. This was okay. So that was.
Let's see it here. Fisker.
Here. FSR. All right, but we started back here. It was months ago, right? It was a couple of months ago.
Yep, a couple of
What
months
does
ago,
that
it
say?
seems.
Okay,
Mhm.
so a couple of months ago. So Fisker, essentially, Apollo SPAC. Apollo's in the name. They have a guy, Henry Fisker, who's very big in the automobile industry, well known. They have what looks like pretty cool cars, but the stock is under a lot of pressure. Ultimately, they're looking at valuations, and they had some good demand for their first cars, but they still have to deliver them, and they still have to get the demand for the next range. Until the world starts seeing the demand for the next stage, I think they're not going to see these levels again until it becomes a real company, is my opinion. We've been talking about how these stocks are under a lot of pressure. I think you could see the pressure here. It's really, this is a big level right here to what, but we've talked about this level right here for quite a while. It broke that. It broke that here. We were here. They were buying. I believe it was somewhere around here. The stock was maybe here a couple of weeks ago. When did they buy those? When did we say that? What was the date on that FSR put buyer?
But yeah, let me pull it up right here. Here it is.
April 12th?
So it was April 6th, exactly 2 weeks ago, and they were buying the
April
14 and a
6th.
halves. Yeah.
Okay, so April 6th is right around here. Jeez. Okay, so we're up here. They were buying the 14 and a halves for April 16th, and the stock trade. We said to buy the April 14 and a halves, we were saying 12 and a half,
Yep.
12 and a half bucks. The stock traded pretty close to 1,200 bucks. That day it traded to 1280. It then dropped down to the low 12s, and then you get an upgrade here. 12 is this, magic area for whatever reason. There was good volume here that you can look back at the videos, but we were talking about 12 and we were talking about 14 and a half. These are big levels. So to get an upgrade or initiated buy by Bank of America here seemed positive. The stock traded 14 and a half, basically right to that same level, and you could just see the sellers. I mean, this isn't a good development today. You would have liked to see positiveness holding this and then maybe get another positive day. This is somehow it's got to turn around. This is not necessarily a good situation here. But what are we seeing? We are actually seeing people come in to buy, I suspect, calls, right? Let's see on the FSR today, because I'm looking at this along with you here. So call buying in this 1 week, you see here 20 big. This was day trading. This is sort of day trading this, but if you look at the maze, I think that this is sort of attracting some call spreads here, the 15-20, looking for that push up. Again, when you're looking at options and you're looking at these types of plays, what you want to see, and we've talked about this yesterday, is you want to see a clear bottom, okay, a clear area where there's a lot of volume. Just like there's volume on the way up, there was volume, these huge spikes. You want to see those huge spikes near the bottom. So we have one here today that is negative. This is saying it's not done. The sellers are still in here. If they take it down to 10, 9, 11, and you get to see these large bars of, a switch in holders, sellers switching with new buyers or buyers that want in for the long term, that's going to indicate more of a bottom. To me, this is not necessarily a bottom here. As much as I like the car and looking at the car, and it's pretty cool what they're doing, as far as the stock goes, this is not a good sign. So I'd be looking at still for this level around here again, which this started, let's just say where that started that day, the low 11, and again over here, which was, you remember it's a SPAC, so it was about the $10 level, but when people puke, it usually goes below. So 11.9, I would like to see these large bars that we're seeing here. See this, what it was going. Sorry. We're going to look at all of these, when we're looking at these, we want to see the same bars that were going, what was going down. We want to see those bars on the way down. Here's one today where people just completely puking it. Okay.
Yeah.
After the upgrade, we want to see more of that. So that's Fisker. They are buying calls today. I don't think it would. I'm not sure it's going to last. My gut is saying it's not going to last, and that's just a market gut, seeing how it's all trading. So I'd rather buy it. I'll tell you what, I would rather buy it at 15 than buy it at 12 3/4, because at 12 3/4, I think there's a hell of a lot more risk down to 9 10. I'd rather wait to see good volume, and there's good volume today, but show me good volume picking it up to 15, right where we're back here, and I'd rather be a buyer at 15 trying to go to 20 than trying to pick 12, trying to pick the bottom here. Is that fair?
Yeah, that's fair enough.
Okay.
Yep. Cool.
Good,
I
good.
like it.
So that would be Fisker. I always get that wrong. Fisker.
Yes.
Now,
Tell me about reopening. I was
go
going to
ahead.
ask, what's going on? Doesn't
The
seem to be doing
reopening
well,
trades.
right?
Yeah. So UAL came out with earnings today. So let's take a look at. Let's take a look at. Sorry. Let's take a look at. Close this. What are we seeing here Well, let's look at the chart first. Okay. So let's look at the chart first. We have UAL. Now UAL has a good international business, so they got double whammied here. They had the earnings weren't great, and also the United States is coming out with some statement yesterday. I read that they're gonna shut down, not shut down. They're gonna it's like a warning. They're gonna say, we advise you to rethink vacationing or traveling to basically 80% of the countries outside the United States. I don't think they've named them yet, but nonetheless, they're sort of going in that direction and saying that there is risk to kind of be outside the U.S., outside borders. You want to travel inside, that's great. I'm sure other countries are saying similar things or thinking similar ways. But let's take a look at what we were seeing here and they all look like this, right? Every one of these airline stocks and the cruise names look exactly the same. We have this sort of double bottom down here at 17 in UAL. We have this sharp move rejection here. We'll just draw that line all the way across. Okay, we had it. Here's a gap too, so we can even go further back here for whatever reason. There was also a gap here, rejection here, sharp rejection. Okay, then we have a buy here, and we have something going on right here as the 40s. This was here through support, and then support again before it blasted off. Took off here, and then we have this dance somewhere around 62. Now, UAL never climbed as high as some of the other ones. Remember, what we're looking at is we're looking at normal. So 77 to, you could look at any one of these names and you could say, okay, up here, this is normal. Okay, this is all normal. And what we're trying to do is figure out this whole risk reward game. And the way we do that is by saying, okay, we started at, if you bought stock and you see, just to show you how bottoms are made, you see this underneath the chart. I'm just going to show, you see all that volume right around here?
Yeah.
Let's call it right around here. Okay. This volume right here. See all that escalating volume all the way to here. Then it started dying down here. That volume, what does that mean? When you see volume like that, that means there's a complete change of control of the company, right? There's guys that were long here that just are puking it all out here. There's a lot of trading around back and forth here. So people are selling, they're buying, they're selling, they're buying. The long guys, the guys that are going to be around for the next 20 years and want to decide whether or not they should buy the airlines, they're buying here, right? That's them buying here. And they're buy and hold because they want to buy and hold it for 10 years if they had to, right? They have to be long the sector and they'll buy the airlines here. When it gets to, remember, they're thinking 98 for United Airlines, 77.5, 95 is everything is back to normal. I'm buying it at 17 to 25. It's a complete disaster and these things may go bankrupt. Okay, so keep that in mind because as you start climbing and the stocks start climbing, okay, what happens is you start thinking about how close are we to normal? How close are we to normal? UAL never really got as high, I think, because a lot of their good business is in international, and that was going to probably stay bad for a little bit longer than domestic. But it didn't go as high as the other ones. If you look at AAL, and we can look at that in a second, AAL when American Airlines went closer to up, where normal was. And what we've been seeing over the last, let's call it month, is hedging or getting out right around here. Okay, right around here in these days. So this stock trading, let's call it since March, which is right here, we've been seeing hedging. We've been seeing, and in some cases, call buying, Okay, but if you look at the videos, I was saying to you, we're already so far off of the bottom side towards perfection, right? Towards getting back to where we were prior to COVID, that it would make logical sense that if we're seeing call buyers up here at 60, 62, that they are buying those calls to sell stock. And then over here, we were seeing some call buying here, but we were seeing a lot of put buying and call selling over the last week and a half. Sure enough, these things have all come down now. So now that they've all come down, and UOA is, didn't have a great earnings, the stock's down significantly today. But now that we have those earnings out of the way, you can look at AAL. So let's look at AAL quickly, because I'm going to show you the options flow that matches what we were seeing. AAL is a little bit clearer as far as, it seemed easier to think, hey, look, this is normal, right? We're talking about 2019. This is sort of normal area. And we reached normal. We went from sub 10 all the way up here to above 25, hitting to 30. This was normal for AAL. So for whatever reason, they took up AAL a lot higher. What we've seen here again, from March, could draw this box again if you want, but from March, we were seeing the hedging and sort of adjusting the risk reward, which meant, I was telling you, I think they're starting to sell some stock, and I think they're trying to either sell calls, buy puts. We've seen some put buying, but today, okay, that's the framework. Today, if you look at AAL, what you're seeing is, or at least what looks like what it appears to be, is a lot more put selling actually in, where do I have it here that I saw? The Junes. So if I look at the June activity, what do I see in June? I actually see a lot of put selling in the 19s and the 20s. I see 19 puts for sale. I see the 25 calls for sale. I see in the Mays activity, we're seeing a lot of activity, 53,000. In Mays, what they're doing here is, let's see if internet's a little bit slow today. Let's see what happens. There we go. In the Mays, we're seeing selling in the 19, selling in the 19 and a halves. Okay. And then we see a 20, 25 call spread, 20, 25 call spread. They look like they're selling the 25s and look like they're getting into the 20s. So we're starting to see, this was a buyer of the 25s back when it was moving higher. But again, we were talking about buying calls, selling stock to adjust the risk reward. And now they're buying these. Now they looks like, they're selling these out, and they're buying these calls, and they're actually selling out these puts. So it's someone saying, for the first time we're seeing in a while, saying, I'm a buyer of AAL at about 19 and a half to 18 and a half bucks. Does that make sense?
Yes.
So they're starting to change from what we were seeing and reversing that. And again, it's not that they thought AL was going back to 10. They just didn't like it at 25. They don't think, I don't believe they think, we want to make it straight here. I don't believe they think it's going here. I just think that they're saying, look, I'm going to buy it right around here. I'm a big buyer. And if I miss it with my puts, at least I'm going to have some calls, and it trades up to 23. I'm probably going to let some go as well. But it looks like they're a better buyer around the 18, 19 level in AAL. That's how you read that chart. And by looking, you can now, for everyone that's been watching for the last 2 months, you understand that part of the game. But today, I wanted to make it clear that they're now switching. They're now going backwards a little bit, going back towards the upside and thinking, okay, we took out 20%, right? The stock went from 25 to 20, and maybe it goes to 18, 19. I'm happy to start getting long again at 18, 19, and that's it. And then I'm getting back into AL. So, this is, I think it's very, very important to understand what we're trying to show here, how everyone can look at this stuff themselves and start reading it. You can look at AAL, you can look at UAL. We can even see in CCL, cruise lines, they're all essentially the same types of trades. But in CCL, I was looking at the June, stock's down 5% today, and the June 25 puts, someone is actually selling these here. Mm-hmm. Someone is actually selling the June 25s. They were long, looks like they were long them here, and they're selling them today. And if we look at CCL, you'd have to ask yourself, okay, so, if I'm going to be long CCL today, I'm looking at the RR dollar. The RR dollar is telling me if I was going to buy, even though the way the big guys look at it is they look at it every day, right? They look at 13,000 options that I'm long. Today they're marked at 2. Would I buy them today? Right? It's important to ask yourself, would I buy it today? Would I pay $2 today? If I would, I got to be thinking somewhere in the 19 range, 19 to 20 range. Okay. Do I think 19 to 20 in CCL? Before, when I bought these, they were probably 80, 90 cents. So now they've made 100%, 100% and thinking, okay, now let's reevaluate. I'm not sure. I think it's going to go down this further. So I'm going to take a little bit of profits. But I think it's important. It's important to see, that 19 on the chart in CCL doesn't look like you'd be selling at 19. It looks like they'd be buying at 19, right? If I'm looking at the CCL chart, right, you could see it. You could say, we framed this here and we're looking at 24. This was a big level, and 18 is a big level here. Okay. 18 is a big level. Okay. You'd had several moves around 18. So 18 and 24. So if I'm looking at the 25 puts at $2 and the machine in risk reward terms, we got to get the stock towards 19. I don't know if that's the whole way down, because I'm a buyer at 18 to 20, right? To protect the guys who are buying here and taking it up and then buying here, taking it up. They should come back at the 18 to 20 level. So again, you're seeing the puts have gone, the market has moved too far ahead. They were shuffling their risk reward, getting out of stock and probably messing around with the options. Now they're taking those options and they're getting out of the options, waiting to mess around and get back into the stocks. Okay, so while everybody's hurting here and pulling out at the wrong, essentially what could be the wrong time, they're going to be sitting there waiting to actually get in. That's how the risk reward is played. That's how, when you're looking at this stuff, you can't, it's important not to chase. That's why I always talk about not chasing. Chasing with options it could be brutal. It works when you're doing this momentum trade, but you always want to, you want to start shuffling around and get active when you get to these points where the risk reward potentially can change, because that's how you make the most money in options. That's how you hedge. That's how every time we're looking at something, we're trying to find those moments where is something happening, is something changing. Okay, today we're seeing things like, let's take a look at, because I think it's important, DraftKings, right? DraftKings is in the online gaming industry. Okay, we've talked about it and almost ad nauseum over the last call it month, right? We're trying to allude to the fact that there is someone very large in the name in DraftKings that is hedging, up here, right? They're shuffling around. They're moving things around, right? Activity and options. The reason why UOA is important. One, we're trying to follow it. We're trying to find the buyers, but it's important because when there's activity, you can start seeing that. And then you look at the charts and saying, there's a lot of activity here. And that means that the powers that be, the big guys, are thinking of a large move up or down. Now it's for us to try to figure out which way that is, but sometimes it's a lot clearer than others. And in this case, in a DraftKings, it seemed very clear. He was buying, the buyer was out there buying, he was selling the 65 and 70 calls. Okay, 70 calls, you're selling those, and he was buying the 55 puts. Okay, so he's buying these puts. Stock has done a tremendous job from here all the way up to 74. There's no doubt. But at the end of the day, the whole stock is predicated on the size of the market, how big the market will be in 10 years, in 5 years, even in 2 years. They're losing money, so it's all predicated on this idea that nobody really knows. And when momentum, and DraftKings, make no mistake, is a momentum name, when momentum switches, it doesn't mean that DraftKings is a bad stock. It just means that DraftKings is a momentum name and will be grouped along with all the momentum names. And when BlackRock decides that they're getting out of momentum names, you see what happens. You see that all the different stocks get killed. And so with DraftKings, what we're seeing here is, again, I don't like, this is what I don't like. You see this right here, let's get a little bit closer, because I want to make sure it's almost a little bit of a lesson in reading the tape and trying to understand the next move. I certainly don't know the next move in any of these names, but I can tell you what my thoughts and reasoning why I think the next move is down. I told you in the FIS, and even though they're down already so much, in the Fisker, the move today is telling you that there's a lot of sellers. How about this move right here in DraftKings when it was, traded, pre-market to like 61, 62? What was the announcement here? The announcement was the NFL football agreement, right? They were chosen as one of, okay. They got this agreement. The stock actually didn't trade that well. It traded up pre-market, and then for the rest of the day, traded down to 58. And since then, it's been weak. That is what I see in the same thing in Fisker. When you get very good news that, let's say we were over here, and that same news that was happened here, this stock jumps like this.
Yeah.
Right? It just goes straight up. Okay, but when there's sellers, that's your clue. The clue is that a great announcement came out, and there were sellers in the name. It doesn't matter that it was the NFL. It doesn't matter. They're telling you, we'll sell it. We'll sell it because we want to get out. So somebody wants to get out here. I don't know how long they take it, but somebody who was buying those 55 puts and 7, they probably think, this 200, I would say this 200 day is the first stop. And then you got this 44 level is sort of stop number 2. So this is 1. Even over here, 52 is going to be, maybe it could hit there by the end of the day if they decide they want to take these over. But I'm looking at a couple of things. I'm looking at this, and I'm looking at the 50 day. I'm also looking at this A, B type of C type of move, which would get you back down to 74 to 58 is 16 and a half. 64 and 64 and a half and 16 is about 48. So it gets you right around here. So we're looking somewhere around 48 to 50. 48 to 50. Okay. So that's how I'm looking at something like DraftKings. Now, I want you to take a look at another name that is in the same space that is just getting drilled. But I want you to remember, why do I do that all the time? PENN. So I want you to remember, when did we talk about this? You're going to be the video guy.
Oh, let me pull it up. Cool. Here it is. Okay, I think it was March 1st. Yeah, March 1st it was. Yeah.
March 1st? Okay.
Yep.
We have here March 1st. Okay, PENN, March 1st. March 1st to 125. Someone came in. Let's do this. Right around here, they came in, and we saw a very, very large call seller. Okay, a very large call seller. And I think they sold, do you remember what they sold? The 145, no, what did they sell in PENN?
Yeah, I have it here.
Down.
I have it here.
You have it?
Yeah,
the June 130 calls.
130 is for $17, yes.
Okay, so they sold the stock has made this awesome run, okay? We were seeing some PENN activity, not a lot, but we were seeing some PENN activity, and then it does this top, then it does another top, and on this top, we see a call sell of the 130 calls. Huge. It was like 10,000 options, and they sold it at $17. Okay, they sold it at $17. And what I was basically telling you is that they were not only taking this opportunity to sell calls, but when they do that, it's likely because they are sellers of stock around that range. Call it 120 to 130, and they have a lot of stock. If it's BlackRock, they have a lot of stock to move, and they might be sellers over the next month, just trying to reduce that position. Okay. And sure enough, the stock did make another move higher and immediately was sold off and has been selling off ever since. Okay. Today, okay, they sold those at $17.
Yeah.
Today, the June, which one's June 130s, right? June 130s, they were bought back. Also, about 9,000, 9,000. They were bought back at $1.15. Call it.
Wow.
Okay. So now they're adjusting. So they adjusted up top there. They've sold out stock. They sold calls. They took in $17 on the calls. They probably sold half of their stock. And now the stock is at 87, and it gives them so much room. It gives them so much room to start thinking about where they want to buy it, right? And clearly, I would say levels of interest are going to be 75, even right here at 80. Call it 75 to 80. And even though it just broke right here, right? You're looking at 140 to 97, 43, 43, and 110. That's going to be 77. So if you look at this to here, back up to here, back down to here, it's going to end up somewhere around, is that right? Doesn't look right. So 43 and, sorry, 67. 67 is where that says. So this is what we're looking at. This ABC says 67. The 200-day says 78.59. We got some support here, and we got the breakout up here, and then we got the last stand, at 50. Okay, so you pick your choice. That's how I'm looking at the world and trying to analyze it. We have a 50-day moving downwards. So even on any push up, you shouldn't get a blast off. It could easily trade back to 100, 105, but this 50 days is trying to show you that it's starting to turn down a little bit, and that will be a little bit of upside pressure. So the upside is probably, it's going to take a little bit of time. Not saying that it can't reach 140 in 3, 4, 5 months, but now it's going to take a little bit of time. These are starting to break. Breaking this level 95 is a break, right? When it starts to break, it starts attracting more sellers. We talked about it yesterday. Again, the shorts get more. The shorts are like gnats, like bees in September, right? They get more aggressive. When you start when in certain time periods. This is the time period when things are going south and things are breaking. Key technical levels are breaking. The shorts are starting to pile on here, so we got to be careful here. And upside calls in this type of name, this momentum names, are going to be tough to actually recoup that. When you're buying these calls here, you're going to need big upside moves. So I'm a little nervous here, but I suspect that these guys are going to start buying stock here around this level. Probably selling out puts anytime soon. That's what I suspect. I suspect the switch from what we were seeing up here to now sort of a buying mentality somewhere down in this level.
Right. Nice.
Is that fair?
Yeah. Yeah, I love it.
Good. Okay, so that was that. You know what? One more into gaming just to complete it, because I was asked a question yesterday in one of the videos to look at Las Vegas Sands. Las Vegas Sands, there was activity yesterday, and it might have appeared to be a buy of calls. I didn't see it that way. I looked at the calls yesterday. There was the in Las Vegas Sands. Let's check my notes here. Las Vegas Sands. There was May 21st options. So Las Vegas Sands May 21st options were active. They looked like buys. I actually thought they were sales. Okay, I thought they were sales on the May 21st here. These 60s. I thought there were sales yesterday. And there was also a trade that went up 5,000 times where someone was rolling their June, let's call it June 62 calls all the way out to September. So when I see that, when I see May, someone bailing out of May, okay, remember earnings are this week, right? So someone's bailing out of May calls, and then they're taking June calls and going out to September. What does that tell you? That should tell you the May calls bailing out of that right in front of the earnings is saying, one, they're not that confident with earnings. That's one. Two, or at least a big move. Doesn't mean that they hate the stock. The stock has been trading okay. It's been a little bit weak over the last couple of days. But they may not completely hate the stock, but they're just they're not going to be in there with calls if they don't think the stock's going to jump $10. Okay, they're not in there for 2-3 calls. Now, the shift, this is important. The June shift to September is what? It's basically telling you, I don't think the Junes are going to work the way I want them to work. I need more time for this to develop. And it's exactly what I'm trying to tell you with when these things start breaking, the big money guys, they recognize that the 50-day is breaking. This looks like a broken stock here. And it looks like it wants to go touch the 200-day. You break the 50-day, you start thinking about hitting the 200-day.
Mm-hmm.
So you have a 66 and a half down to 50, call it 58. That's 7.5, and 64 and a half is about 57. Plus you have this, let's just call it, for whatever reason, this here, 55. So I'm looking at 57. Let's call it to the 200-day, 54. Starts getting here. I suspect, as long as it's not real problems in Las Vegas, and this is just the market coming off, I suspect that you'll start getting buyers again from 56 all the way down to 54, we should start seeing some activity again where they're going to start playing for the upside. But again, this is going to take away a month, 2 months, 3 months. This is why they're actually shifting out. All of these themes, it's across the board. Part of winning picks, what we're trying to do is I'm trying to go way out as well. I'm trying to move out as far as I can. And if we're getting stopped on a couple of names, then you got to take that stop, because it's probably too short term, and we'll figure out how to get into it another time. But right now, the market is putting some pressure on all stocks, and we need to just make sure we manage. Just because we like a name, we love a name, that doesn't mean we're sticking in a name. Okay, there's a lot of times that look, the reverse is true as well. Stock's going up, we're long calls, and we don't like it. We don't want to get out of that trade. Perfect example is Oracle, right? Oracle is just nonstop for 2 months. We've been long calls there, and we're taking our levels, and that's it. Pinterest, stock goes up, we should have taken our levels, and frankly, most people should have been stopped out here, right? There should have been some trailing stop. You hit 200%, some trailing stop. On a lot of these, it's right now, it's very critical that risk management is we are following the rules to some extent. Following whatever plan you have, you want to follow that plan. It's very, very important in this type of market. Okay, so keep that in mind. Let's move on to the next one. What else are you seeing?
I wanted to get your input on the chips shortage been keeping on, the AMD, TSM, AMD.
Another name where they were TSM. This one I've been watching carefully, right? I've been watching TSM carefully. So let's look at TSM. I have a block in my head. I'm not looking at the chart. Okay, so TSM. So I want to say it was literally right here. You know why I want to say that? Because you get all these people jumping down my throat if I'm ever wrong on anything. But I think they were down here. We were talking about there was a call seller and a put buyer. I believe it was the 120 and the 110 puts. So 110, 120. You're the video guy. What do we got there? When was that day? I believe it was probably March 29th, March 28th, 29th.
Yes, it was exactly that date. Yep. March
okay.
29th.
I remember because this pop, it was like, okay, now what's going to happen? Again, we saw a very large collar, buying puts, selling calls.
Yep.
And we were talking about if someone's doing that, they're going to think somewhere around this range, right? That obviously they're thinking down, and we have a sharp move from 140 to 107, and you think to yourself, can it really go down? This is about 140, almost 141 and a half. So 141 and a half to 107 and a half, that's 34 points. Can it really go down 34 points from 127 and a half, right? Can it really go down to, that's 27, 6 and a half, so 93 and a half. Call it right around there. Can it really go from here down to here? Well, that's what this collar is trying to say. It's basically saying we are collaring because we're nervous. We want to buy these puts because we want to stop there. We're going to be selling stock starting right around here and higher. And sure enough, the stock goes to 122, 127, and immediately is being sold off here consistently. And that's the signal. So I think these collars, when I'm showing you, it's not because we're trying to follow those collars, but it's because it's giving us a signal that you probably got a big seller above 120. And sure enough, we did. And now it's looking weak. And you heard them, TSM last week said that things aren't looking so good for the time frame of getting these chips back, right? Yeah. You had the Texas freeze, the factory in Texas stopped. You had Japan, they had a stoppage because of a fire. And that, when it's like Murphy's Law, when something can happen, it's going to happen, right? And so this is clearly, it looks like becoming a problem. You see GM, Ford, things, people need chips in order to produce product, in order to sell them, and in order to produce revenue and then earnings. And if you're not getting the chips, and we might not get them till, what happens if we don't get them into September, October? It's going to do a lot of damage to some of these earnings. Now, the market might forgive people, but when you see those numbers, the initial thing is let's wait till we see the demand and it starts picking up. So I don't know. This TSM, I'm looking at 100 to 92 range. That's sort of that range where I think people will start coming back to it if it decides to break. If it breaks this level, you could see this, and this becomes active. If you see it hold 107.5 and it's coming back up, well, then that can be negated. But these guys are clearly, there's somebody selling here. They don't do that trade without selling stock.
Makes sense. Yeah, I see.
Okay, so now we're looking at AMD because that's the big one that I think has been the most challenging. I really like the stock. The chart, it's been under pressure. The whole thing with Intel story up here. I mean, we know that story. We've talked about it already. There's a lot of call buying up here. Turned out Intel actually got a new CEO. The stock has traded down since. This is, you're looking at this. This is it's not a particularly great looking chart. Sorry. We're looking at, you could take it from here, and then you got this sort of flaggish thing going on here. And we talked about it. This is a huge level. Look at this level right here. It's a huge, huge level.
Yeah.
74, right? It's a huge level. And, there's very little, a lot of stock, but very little time for anybody really to get in. You had to be extraordinarily quick. So you have a window of 1 week where the stock jumped from 52 to 74. 74 has got to hold. If 74 breaks with good volume, it's a disaster.
Yeah.
This is a disaster. Okay. So this is what I get nervous about. This is why I tell people, you know what? Instead of being long the stock here, I like the stock here, but instead of being long the stock, something here like a call or call spread, I think is a very valid idea, because if we break 74, you could see something right close to about 62 pretty quickly. Okay, you could see it pretty quickly. And I suspect, by the way, this is 94 to 74 is 20 points. 20 points from sort of this flag point of 80, it gets you to about 60. Mm-hmm. So let's call it right here, 66. You could see that drop happen fairly quickly. And then you got earnings coming up, right? So earnings are, people are looking at AMD. People like the stock. What happens here is, let me give you another way of looking at it. People like the stock all through here. Now the stock is trading down. It's trading heavy. Clearly they're buying here, but this bear flag is essentially telling you that it's being sold off at lower highs. Lower high here, lower high here, lower high here, and a lower high there. So it's being sold off. There's a seller here. Okay. And people are buying it. There's, the buyers, the people who missed it at 90 in the 90s, they're saying, wow, I can get it in the 70s. That's great. The problem again is you get a bad number. You get a bad number this next week, 427. The weak hands, forget the long terms. The weak hands could blow this number, could blow this 74 spot. And I think that's what you got to worry about. So let's figure out a strategy of how to play something like that. Again, all I've been saying is, because that's such a big number and it's so visible to everyone, everybody's seeing it, everybody's buying stock against that number, that's when it makes it dangerous. I would look to say, all right, look at the 80, 90, 83, 60, 90 call spread is $2.50, call it. So let's just call it the 80, 90 is $2.50, 3-1. I'd rather see someone buy the 80, 90 call spread. You get May plus the earnings, you get the earnings in next week, plus you get 3 weeks after if it's good, and then people start getting back into the name. I'd rather see you buy that one and risk $2.50 than literally be long the stock and potentially drop 16. So yeah, I see. That's how we're kind of looking. We're looking to play. We'll say, all right, I'll give it to you. It just came from the 80, 90, call it 100 to 85 range. If it can recoup that, goes back to 90, I think you'll start seeing sells anywhere around 88, 90, but you'll have this 2.5 point spread, $2.5 $10 point spread that could be at max worth 10, max profit 7.5, 3-1 on that trade. You probably could make 2-1 on a big move higher towards 88. So, this is, again, it's I want to say basic, but to me it might be basic. But I'm trying to teach you how to think about things as far as what could drop, how much you'd have to spend to trade it up. I like AMD. I think it's a great stock. I think it's has a lot of things going for it. I think everybody's going after it, ganging up on AMD, and they're trying to take their business, including NVIDIA now and Intel for sure, trying to do whatever they can to get back or to keep their share. But I think that it's important to look at the board just on a technical basis and say the risk is increasing here. And we are seeing sellers. There is a seller. There's no doubt there's a seller in AMD. Okay, sellers, when you're talking about 75 to 80 and the stock is still trading there, again, the more it trades there and the more it keeps coming off, the more risk there is at that level. It's important. It's important to watch that. Cool. Any questions? Anything that people are talking about?
We had a few questions, but why don't you guys first like the video, help us out, and subscribe if you haven't, and then second, I think everybody wants to know about Tesla play that you want to show us for earnings.
Good.
Pull the up and the down, and then in the meantime, you guys ask questions.
So Tesla is it finds it acts like it's moving a lot, but in the end of the day, it's Tesla, and it's supposed to move 50 to 100 points, every few weeks, just because it's 60 vol, so 70 vol. So what I'm looking at here, and it's constructive. Like the chart has gone from not so good to actually constructive. Okay, so I'm not at this point, it's let's try to find a level that maybe makes sense on the downside and on the upside. Here's let's say one thing. I'd say one thing that I always look at. Okay, this doesn't necessarily look like a blow off top, to be honest. Okay, so that's a positive thing, meaning a blow off top looks more like, we know what it looks like, but let me just blow off top looks more like that. Okay, in general, just like a general statement. When I see this, I'm thinking, this is a stock that went up and then they took some profits, and let's see what happens. So first of all, the first point is it doesn't look like that. So there is potential for a spike here for whatever reason. Tesla's it's going to come out with good news, new battery news, whatever it does. So that's first point. The other point that I do see is that I'm always looking at sort of this area right here, right? This area right here where it was this jump and this move up, this move from 400 to 900. That's the move I'm focusing on. Now, you can look at this name on the positive side or on the negative side. On the positive side, you could say this move here from 400 to 900 sort of could coincide. Let's just 400 to 900. 400, that's 500 points, right? 500 points. So 500 points from 535 would be 1,035. Yeah. Okay. So give me a strong market. Give me a battery news on Tesla. I would look for something sharp up there. Maybe it's this earnings. Maybe he decides something this. I don't know. But I would looking for something sharp up there, and then maybe that's the end. I don't know. But that's the bullish case as far as technically speaking. And I'm not going to argue the pros and cons of the actual story of the whole fundamental story. I think for the most part, everybody knows that it's either they win the whole world and they are the EV stock of the future, and maybe 1,000, 2,000 is maybe 1,000 is too light and it goes to 2,000 for sure, or they're the EV sector is tired out to some extent and we start going the other way. So the other way is basically looking at something where we've done this move, now we're making this other move down here where it's gone from 900 to 550, so that's about 350 points, right? Just call it 350. Yep. And 775 minus 350 would get you to 4.25, which sort of gets you right to this box area. So that's the way I'm looking at it. The positive is the other positive. It recouped that 50-day. That's a positive. It's done its job well, trying to close the gap between the 200 and the 50-day. So that's a positive. So right here, we had a big move here. It's come down here. There are sellers because the market is selling off. But I think anybody's guess here on which way it's going to go. Obviously, the bulls bears. But on a risk reward basis, I looked at something that I thought might have been interesting to play for someone who wants, even if you're you're concerned a little bit about the downside,
Okay.
and you're thinking, okay, look, I want to see if I can get long. Let's go to June. I want to see how can I get long Tesla or position myself that I'm happy getting long Tesla at around, let's call it 500, right? The 500 range. Stock gets to 500, anywhere over here, really 550 to 500. I'd like to be a buyer, right? Let's call this 500, okay? So if anywhere around 500, 550, I'd like to be a buyer, right? And I thought to myself, let's look at that, because right now they have, you see this, a lot of times we see that the bullets, this blue is over here, it's bullish. Bullish means what? Calls a better bid. Upside, way upside, calls a better bid. Bearish means what? Downside puts a better bid. So that means I get more for these really far down downside puts. They're willing to pay me more than they usually do. So in that case, I want to take advantage of this. And now volatility is rather on the low end. So I want to take advantage by sort of maybe buying options because it's a little bit low, going into earnings. Okay, usually this is a lot higher. So it's a little bit lower, going to earnings. And people are leaning negative, probably because you had this big story about this car with a phantom driver, and nobody knows if, Elon Musk is saying that they didn't even have, the self-driving package. So how can they crash with nobody in the car doing self? Nobody knows. They're going to figure that out. But I'm sure that has brought people's attention to the downside puts. So you got this bearish, people are bidding up. So I'm looking at the June, let's say the June 520s. Let's just call it the 520s. And it's way far down, but let's sell two of those at $12. That's $24. Okay. And then you know what? I'd even go, let's go a little bit higher, 550. So let's about 16, let's call it 16 and a half. 16 and a half times 2 is how much? $33.
33, yeah.
$33. So I could spend $33. Where can I spend $33 and pay maybe just a little bit? So if I look at the 650s or let's call it the 640s. So buy the 640s at $40 and sell two of those and collect, where were we, the 550s? And collect 30, let's call it 18.5, $37. So 37 and 40, that's $3 essentially, right? You see that?
Yep.
So for $3, I actually get this 640 to 650 range, okay? Which means I subtract, forget about the premiums. I just take 640 minus 550 is 90. And then 550 minus 90 gets me 460. So now I basically have to say to myself, I have to own the stock. I'm going to pay $3. Let's just call it $3. What was it? $2? $3? $3. I'm going to pay $3 for this structure. I'm not going to look at it. And basically, I'm a buyer of Tesla down for this risk I'm taking, which is buying the stock at 460. I have is a possibility I can make $90, or the value of that put spread, the 640 put spread at 550 is $90. So that's the max it could be worth. Okay, it could max be worth $90. I pay $3 for that now. If it ends anywhere like 600 or 590, you're making 640 less than 600. It's going to be a $40 value here. So 40 less than $3 you paid is $37. So you make 10 times your money here. You have to take the risk that it goes through 460. So if this happens and it starts going towards this level, 4.25, okay, you're going to own the stock at 460. So you got to be prepared to own the stock at 460. But I like that because it takes advantage of the way downside puts, and it takes advantage of it takes advantage of this, and it takes advantage of you're not sure up here, but you know what? For $3, I can get some room down below, and I'd be a buyer at this range. You can move that higher if you want. You can go say, okay, I want to do 670, so I'm going to pay 51. I'll pay 51 for the 670s, and I will sell the let's call it the 580s at 22.5. So that's 45. So I have to pay 6 for that now. 670, 580s. is how much? That's 110, or that, no, I'm sorry, that's 90. So 90 below 580. So I'm getting long at 490. Now you're getting long right at this level, this breakthrough up here, 500.
Right.
Okay. I think for anyone that is not sure up here, but thinks they want to get long, it says, I'd love to get long Tesla down 30%. Like, to me, that would be awesome because I can buy it long term, hold this and that. But I don't know up here. It seems like it's trading a little bit weak. It's basically trying to, make money between a certain range down, call it 20% in Tesla. You get down 20% in Tesla, that's going to be a home run trade.
Yeah.
Okay, 15 to 20%. If it goes up and goes up to 1,000, you lose your $3 or whatever, the $5 or $6, whichever one, the premium that you pay for that structure. That, again, that's taking advantage. It's taking advantage of the this right here, which is skew. So you're buying one, selling two of the downsides. Now, if you want to get long, the stock and think that the stock could trade through where we're seeing 1035, then you start looking at, and it's an earnings play, the May. You can buy the 1 week, but I think, if it actually is positive, you're going to see probably a few days in a row of movement up here. But let's talk about Tesla, the 755s. The machine is telling you, $40, the 755s to pay 40. It's a lot of money. I would suspect that you can do some sort of call spread to reduce it. They make it difficult to act. You still need big moves, but if we're looking at a break, you're looking at a break here from this just traded right here, 680 to 780. So that's 100 points. 100. If it actually recaptures this, you can see 100 plus the balance here, which is, you can see 125 point move from about 680, 690, which gets you to about 8.25. So something I would look at, by the way, for when I look at earnings and it's 1 week, that's a lot of times call spreads work best when you're looking for the answer, and it's like being a sniper over a certain range. It's like, I'm going to pay this because I think it's going here, and that's going to be the play. So if you're just looking for earnings and you think, okay, it can get up to 820, 825, let's just see where the starting point is. It's telling you here 725. I may look at the 750s versus the 750 versus the 810s is about 15. Right? The 750s, 26 less, let's call it, it's $15, 15 to make 60. So it's about 3-to-1. That's a 3-to-1 play to the upside. I like 3-to-1 plays over earnings in a name that, nobody knows where this thing could go. So that's how I would play Tesla upside with call spreads. And I would play the downside with 1x2s if that's what you wanted. If you felt comfortable taking that risk of the downside. Okay. Yeah. That's trying to take advantage. By the way, again, we're trying to take advantage of the board and trying to take advantage. The volatility is a little bit low, so we can buy a little bit closer to where the stock is. But I would suggest, capping it up here, because if you get this on 426 on Tuesday, you have a big move up. These things are all going to trade a lot lower. It's not going to, these 810s are not going to move that much, even if the stock trades 790.
Yeah, I see.
Which is 70 points higher, 10%. A 10% move higher, it's just not going to move these that much. Okay?
Fair enough. Cool. I like it.
Good.
Awesome.
Last questions before we go?
Yeah, sure.
How about hit the like button? Hit the like button and we'll look at one more. I'll look at something. Go ahead.
We had a question about NIO. What are your thoughts?
NIO. Okay.
Yeah, I think, was it?
Sure. Look, I hate being missed the bearer of bad news, and I hate trying to, always overthink some of these names. Sometimes it is what it is. The stock is under pressure, and we want to see it. We want to see it gain. We want to see it It's a dogfight. Keep going back. It's a dogfight, and you're looking at two people fighting, and the big guy's beating the hell out of the other guy, and the other guy is Neo, and you're like, Neo, come on, hit back, and Neo's getting brutalized. And what are you doing? You're hoping for the bell to ring so you can pull him to the side and say, take a 10-minute break. Isn't that what we would do? If you saw two people fighting and one was getting his head pounded in, you would say, stop the fight for a minute. You'll do a rematch or something, right? That's what this chart is saying. So I'm just calling it the way I see it, and I'm not trying to say Neil's not a good stock. I'm calling it the way I see it here. This is let's get it a little bit shorter, just to get into more detail here. You have a stock that is, I sense the nervousness from people owning this stock. They've held it for a while, even further back than this. But again, you're looking at let's do eight. Let's just do 9 months here. 9 months, and let's get into here. Okay, so this is what you're working against. It should be as clear as day. This isn't rocket science here. This is simply, this is a flag, a bear flag. But I think it's important to understand the psychology. The psychology is there's a fight. Neo's getting his behind beat. Okay, it comes back swinging a little bit here. The guy is pounding Neo. He comes back swinging again. Neo's getting a little bit tired because his face is getting beat up, right? And he's dancing around the ring like he can't move, And like I said, you want to, what would make me? It's like the Rocky story, right? When Rocky all of a sudden just comes back, a move through here, trading 42 on good volume, on something that's going to last, not just one day, on a full stop, trades on the highs, right? Trades on the highs at the end of the day, closes on the highs, and then the next day trades a little bit higher and sustains that, holds that level. You want to see that. That would be, in our visual terms, that would be Neo punching him, hitting him with a good punch, and then the guy stumbles. You watch a UFC fight, it's back and forth, right? And you can tell when you watch a UFC fight, for all the guys that watch UFC fights, you can tell when someone is visibly hurt, right? You can tell. And while looking at the fight, you're going, that guy just got hurt. That hit hurts. And now the momentum's going to swing the other way because now that guy got this burst of energy and he starts pounding the other guy, right? There's no difference. I mean, when I look at these, I try to take away my thoughts on what the stock is for a second and just look and try to see the fight that's going on between buyers and sellers. So we're looking at a potential drop, in my opinion, my idiotic, dumb opinion, a potential drop to, I'm looking at, let's call it 22 to 26 for whatever reason. Break this level, break this 34 here, start getting good volume here. Okay, and I suspect that's 34, 33. You're going to start seeing the volume pop up. You could start seeing a quick move towards 26 range. And if it's a disaster out there and the market's completely coming off, you could see this range. I'm not saying it's going there. I'm saying get a break in these names and you start seeing volume. That volume is going to start piling on each other. And that's what happens. There's all buyers here. From buyers here, there's buyers here. People are buying. They're buying because they saw it at 66 and now it's 35. And they're buying. But they're not recouping the high. See this? High, high, high. What's the pattern there? There's lower highs. That means the seller is stronger and he's putting pressure on the buyers. So break here and you can see this. It's just technical analysis. It's nothing more than, I'm not saying that they're not going to sell cars. I'm not saying I'm sure this stock at some point finds value. And maybe in 3 years, if you told me it's 75, I couldn't tell you that it wouldn't be. It might very well be 75. I don't know. But right now we're playing a game of what's it going to be in the next 2-3 months, and I'm telling you that you have to be very concerned here. So if you want to buy Neo calls, and if we're seeing Neo call buying, I think that's a good idea. But I think the people who are buying the Neo calls, I think I think those people that are buying it are selling their stock. They're seeing exactly what you and I see. And they're saying, does Rocky Neo have a chance? Yeah, it's Rocky. It's Neo. It has a chance. Like Rocky's going to beat Clubber Lang. You just know in the 8th round, he's going to start fighting back. Well, I don't know if I want to take the chance that Rocky gets knocked out and the stock gets to 22 or Neo gets knocked out. This is the how we're looking at it. We're looking the risk reward. What I just showed you was simply analyzing and framing the stock. And what I'm asking people to do is start figuring out how to do that first. When you do that, then you start looking at the board and you start looking at the option board and saying, all right, where can I position myself just in case this happens or in case that happens?
Right.
Okay. That's the most important thing you can get out of this podcast. And we're going to do it over and over and over each day. And I'll leave it at that because now we have to tell you that we're not going to be here for the next 8 days. And I'll let Marco tell you the bad news.
Okay. Yeah. We're going to be taking a short break until Monday the 3rd, and we'll be coming back stronger. Monday
the 3rd, everybody can get a little nap in, and we'll be back on that Monday. Yes, Monday the 3rd. So I know there's tears and you're going to miss us, but Marco, I will see you Monday the 3rd.
I'll see you then. Thanks, guys. Thanks, Phil.
All right. Thank you, everyone. Be good.
Bye.